Hi everyone, thanks for tuning into my channel, All Things Accounting. Today, what we're going to be dealing with are intangible capital assets. So stay right there and we'll do this together. So intangible capital assets, what are they? Well, let's review what capital assets, the physical capital assets like property, plant, and equipment are. So those, again, are assets where they are owned, they have future benefit, where they can be depreciated for the PP&E and match the depreciation expense with the revenue for the period for which they assisted in generating. So intangible capital assets are capital assets, but they are, as the name says, intangible. You cannot touch them. So there are several examples that I will be going through. So let's look at a formal definition. They are rights, privileges, and competitive advantage to the owner of the capital asset that have no physical substance. So some examples of this would be copyright, trademarks, or sometimes they are also referred to as trade names, patents, goodwill. Those are some examples, and these are shown separately on the balance sheet. Now, intangible assets, capital assets, are recorded at cost when they are purchased, and they must be systematically expensed through its estimated useful life, just like how a physical capital asset would have its estimated useful life. For example, a vehicle of 5 to 10 years or whatever it is. Intangible capital assets would also have an estimated useful life. So there, for physical capital assets, you would match the expenses through depreciation. For intangible capital assets, it's the same concept, but it's called amortization. And for intangible capital assets, usually the only method that you would use to amortize it is based on the straight line method. So if you haven't seen my tutorial on straight line method, please do so. It's very informative. It'll go through a numerical example. So what I want to do is go through a little more detail for each one of these. So patents are exclusive rights to its owner to manufacture and sell a patented machine or device, or to use a certain particular product that would give them a specific advantage for up to 20 years. So the federal government encourages inventions of new machines and devices and different production processes. So an example, let's say for example here, if ABC company purchased a $25,000 patent, and it would go through usually the patent office. So patents are recorded, and intangible capital assets are recorded at cost. So let's say this happened on January 1st. So it would be debit, patent, and credit, cash of $25,000. Now let's assume that it has an estimated useful life of 10 years. So on December 31st, what we would do is reduce this patent value, and this would be debit, amortization expense, and credit the patent value because we've used it. Therefore, we're matching that with the revenue for which it helped to generate throughout the accounting period. So since it has a useful life of 25 years, take 25,000 divided by 10 is 2,500. And then we would have the explanation under each one. So that's what patents are. So now let's examine what copyrights are. So copyrights gives the owner exclusive rights to publish and sell musical, literary, or artistic work during the life of the creator plus an additional 50 years. Just like how patents were, again, it's amortized over an estimated useful life, and only identifiable cost of many copyrights, it tends to be the fee that's paid to the Copyright Office. So if it's material in nature, what you would do is capitalize this and recognize it on the balance sheet and amortize it over its estimated useful life. However, if the fee that's paid to the office is a small amount, then what you would do is just write it off and expense it during the accounting period itself. Next, we're going to be looking at what trademarks are. So trademarks are symbols, it could be names or a phrase or a jingle that's identifiable with a company's product or service. An example of this is, say, McDonald's. They have a little jingle and a saying that tends to be da 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 da, I'm loving it. So that was applicable for a certain period of time, but they own that. Now, usually ownership and exclusive rights are established by registering with the government's patent office. And just like copyrights, if the amount is small, the fee is small, then what you would do is just write that off during the accounting period as an expense. Otherwise, if it is more material in amount, then you would capitalize that and amortize it over its particular estimated useful life. So next are leaseholds. So leaseholds, basically a lease is a contractual agreement between a lessee and a lessor. So basically, it is the right that's granted to the lessee to use assets that's provided by the lessor in the lease. So the lease will have stated a particular amount that will be paid on a particular period. Usually, sometimes it's on a monthly basis. It will tell what the lease term is, what the duration of the lease will be, and what the asset will be available for use by the lessee. So an example of this would be, say, for example, office space that's leased out to a lessee by the lessor or by property management, tends to be a lessee. So when it's amortized, we would debit rent expense and we would credit leaseholds for whatever the amount should be. Now, lastly, what we're going to be looking at are goodwill. So what is goodwill? It's when the price paid for a company. If you're going to purchase a company, there's a purchase price. So the price paid for a company exceeds the fair market value of the company's assets, net assets. So remember that net assets here are assets minus liabilities. So we could also, that equals, based on the accounting equation, remember, assets is equal to liabilities plus equity. Therefore, assets minus liabilities is equal to equity. So the net assets could also be known as the book value of the company. So when you pay, let's say, for example, that I pay $1,000 for a company that's worth fair market value is only $800. So that excess $200 that I pay over the $800 book value is called goodwill. So why would that happen? Well, sometimes the company has certain valuable attributes. Get that squeaky toy out. So there are certain circumstances why this would happen. Say, for example, a company's certain valuable attributes cannot be measured amongst its net assets. So we can conclude, let's say, for example, that a company has superior management, skilled workforce, superior customer service, quality of goods and services, for example. So that's why it has a value that is exceeding its fair market value. Let's say, for example, that we have a company. The purchase price of the company that we're going to pay for is $8 million. The book value, meaning the equity of the company, so assets minus the liabilities. If assets are 7 million, liabilities are 2 million, therefore the book value, or the equity in this case, would be 5 million. So basically the goodwill in this case, goodwill, is $3 million that we're paying over and above the book value. So goodwill is not amortized. Unlike the other intangible capital assets, goodwill is not amortized, but rather there's what we call a test for goodwill impairment, and it tends to be done by management. So impairment results when the current value of the goodwill, meaning the fair value of the company less the fair value of the net assets, is less than the carrying value of the goodwill. So in this case, if we do have a loss, we'll have debit, loss on impairment of goodwill, and credit, in this case, it would be credit to goodwill. So there, again, it's not amortized. It's just there's a test for goodwill impairment in this case. So this is just a little tutorial on intangible capital assets. I hope that it was useful for you, and I hope the little explanations for the different types of intangible capital assets assisted you in understanding what the nature of intangibles are. So if you enjoyed this tutorial, please subscribe to my channel, hit that like button, and hit that bell notification icon so that you'll always be up to date on the new tutorials that I'll be uploading. So until next time, take care.